Hello investors and welcome back to Just Randy Stocks. We're going to be talking about Krispy Kreme during this video. Its IPO listing, which is scheduled for July 1st, ticker symbol DNUT. Its price point is going to be anywhere from $21 to $24. Yes, the well-known sweet treat brand with an 83-year-old history is going public. So one quick administrative topic that I want to cover before we get started, just a big thank you to everyone who has subscribed to this point. I know I've probably said that in the past. I've done 22, 23 videos thus far, and I have reached almost 400 subscribers. So at the 500 mark, I am going to go live, and that'll probably be this week or next week. Just thank you. That's it. The first thing I wanted to cover was this analyst article that I found. Krispy Kreme's IPO comes up with a big hole for bulls. Its donuts can do just about everything except make money. So you scroll down and take a look at this paragraph right here. You can fact check the numbers, and I'll leave it there so you can pause and take a look at it. But if you go to the S1 filing and they're talking about these numbers right here of net loss that are increasing from this December 2018 timeframe to 2021, and if you look at what the numbers say, you could sort of be understanding and say, okay, well, I don't have too much concern as an investor. Strategic initiatives, number 4. You see it says 5,000, 4,000, and then it pretty much went threefold up. So you could look at these numbers and say, all right, we've got some acquisitions that happen, and then down here, number 4, it says there were some strategic initiatives that happened, consulting fees, and a legacy wholesale business in the United States. So they made some investments in personnel transition costs, network conversion, and setup costs related to the evolution of their legacy wholesale business. So I didn't have too much concerns when it comes back to the article. So you can see sales are growing around a 20% rate, but interest payments are $1.2 billion on debt. So, I mean, in the article, it even says, well, what do they plan on doing with this money? $24 a share, it's a whopping 27 times the adjusted earnings before interest, taxes, and other expenses. But what do they plan on doing? Right here, it tells you that, and this matches with the S1 filing also, they're expecting to get $650 million in the IPO proceeds, and they want to pay down debt. I mean, that's going to make everything look better financially. They're going to buy back shares from early investors. That should help also. And then the rest, but this person is being kind of negative and says, if any, will go back into the business. And that's what I want to discuss during this presentation is right here you can see that 1.1 billion is not a number to turn an eye away from. The United States, United Kingdom, Australia, New Zealand, Mexico, and then all other, they have this global reach, and I believe they plan on expanding that, and I'm going to show you how you can look for that information yourself. So first, I want you to listen to the CEO because I want to be transparent and find both good and bad so you can make your own decision. Are you excited about this company or not? And I just want to talk about this afterwards, but let's have a quick listen.
Mike, this is not just the only incentive that you have going on at Krispy Kreme locations. You also have Be Sweet weekends and Motivation Mondays. How is the company helping franchisees keep up with the influx of customers? And what exactly is the return of investment here for Krispy Kreme?
So, I mean, just to give you an idea, last year we gave away 30 million donuts, right? So we didn't come into the year thinking that we're going to do 30 million donuts from a giveaway. We've always done fundraising and had some type of a give back to the community. The majority of the United States is a company-owned system, so we pick up the tab. And our franchisees have been great partners with us and have benefited along the way as well.
So just a quick pause right there. The thing I want to say here is, do we have someone in a leadership position that is looking out for shareholder interest, or is it part of their culture to give away a lot of free stuff and not really have a good metric surrounding it, controls in place? So I want you to listen to just a little bit more because as an investor, you want to protect your money. You want to know that the operational costs and all of these free donut giveaways are controlled to some extent and planned for marketing expenses.
When we talk about funding all that stuff, to Brooke's point, it does seem like giving away quite a bit. And obviously, I guess there's a set amount of how many Americans there are in this country and how many might actually take you up on your offer for a free donut, but questions around how many are going to do it every day for the rest of the year. Have you thought about how are you going to pay for it in terms of insurance if things do get away? Was there a backer there to help you try and forecast?
That's one of our brands is to actually give back and how do we enhance the lives of others through the joy that's Krispy Kreme. No, we don't have a backer or insurance to do that. We just like we saw with healthcare. Anybody in healthcare could have come in on a Monday, and some people would order 5 dozen donuts or 10 dozen donuts even at times. But they also start to pay for them themselves. So we're not going to do this for the few that want to come in every day and try to, I guess, if you're thinking about beat the system or something like that, that's not what we focus on. We just focus on actually doing the generosity that's Krispy Kreme.
So I would say that's the portion that I like about the video. So the first portion was, it doesn't sound like they have good controls around, the giveaway. That he was surprised by 30 million donuts given away during that time period. So maybe not strong metrics, but I do like the philosophy. So you can make your own judgments on the video. Definitely wanted to share that with you. So we're going to take it back to 2010, where they did expansion into Australia. And specifically, this was an article. And the reason that I'm talking about this is because further expansion is going to be considered. And I want you to look out in the future if you decide to invest in this company. This article here, the USA has, at the time, 2010, 224 stores serving population of 300 million, and basically one store per 1.4 million. And Australia had 50 stores serving a population of 21 million, one store per 420K people. So it seems like they were saturating the market with too many locations, and it kind of didn't start off on a good foot. Now, I believe they've recovered since then, and maybe they've learned from this. And obviously, they're not going to be able to overpopulate areas like China, but just something to think about when they do the expansion, which I believe they plan on doing. The next thing I wanted to look at was the career search filter. You can filter the career search by support center and take a look at the positions that are open for this company. So with no filters, there's 1,300 positions that are open for the company. And with the filter on for these support positions, we have about 18 critical roles, and the one that stood out to me the most was this Director of Development. And when you look at the description, responsible for identifying, developing new markets for Krispy Kreme with a focus in Western Europe, Brazil, and China. Now, this could be huge for investors who get in early. So I just want to repeat again, we already have a presence in Europe, but Brazil and China, that could be a big needle mover for the stock. Now, once the news comes out, it's going to run up, so you want to get in before the news, and that could be the IPO listing. Now, maybe you wait for the IPO to come out and you try and get in under $20 if it's possible. The next thing I wanted to do was take a look at the history of Dunkin' Donuts and what they sold for. What was their price action when they were public? So Dunkin' Donuts had a historical last 5 days of trading of $106.40. Now, of course, they got acquired and went up, rocketed up about 20%. So let's make sure we put that into perspective. Dunkin' Donuts brand is going private in an $8.8 billion deal done by Arby's owner, and why it's not a shock. And you could read through that article. Feel free to take a look at that. Now, of course, I'm not doing a side-by-side comparison of all of their financials. That would be like market cap, their balance sheet, like all of that, right? So you do have to take into perspective that, there could be a major difference. But the one thing that I did want to show you is, the overall total revenue for 2019 was 1.3 billion, and here in their statement for Krispy Kreme, it was 1.1. So for them to be valued at about $85 and their 52-week range was $38, I would say if you can get in on this stock under 20 bucks, I mean, it might be something that you want to add prior to this expansion. And I believe some of the financial numbers are just going to improve as long as they can control their costs. So if you don't have something in the food and beverage area in your portfolio to diversify it, I mean, just ask yourself, are you addicted to these donuts? Have you seen the face on someone when they experience one of these donuts for the first time? They've got a flagship location in New York. I think they're great with social media. It's definitely something that you should consider. So that's my time on this video. Feel free to leave a comment below and make sure you give me a thumbs up if you learned anything in this video, if you found it valuable, and I'll see you in the next one.